Ron from Ronald Rohde Law, and today I want to talk about this shift in investment theory. And basically, there's an article from the Wall Street Journal here, and what it goes through is this process of manufacturing where they were just in time. And this really reflects a continued gradual adoption or adaptation to the realities of a very connected global supply chain, is that tiny little interferences can have a huge ripple effect on suppliers. Now, what does that mean for you as a commercial real estate investor? There is an opportunity on US soil, whether you're by shipping hubs, whether you're by actual manufacturers, vendors, suppliers, they are going to be holding more physical inventory and they're going to be holding more delivery options, and there's going to be a greater need for additional real estate. And basically, if there is even a 1% increase in the total square footage, that is an incredible amount of demand for this industry that's already seen a lot of increase from e-commerce and those types of delivery. You're looking at an opportunity for increased rents and increased occupancy for industrial properties, that these tenants have shifted from just in time to just in case. And that's huge. And I think that this article really kind of substantiates what I'm talking about. So we have Toyota symbolizing just in time. You have Ford, who is losing money. They're unable to sell their number one selling pickup, the F-150, because of a lack of materials. They're not going to let that happen again. We have the Suez Canal, we have COVID-19, you've got longshore, you've got strikes. There's all sorts of things in this world now that can disrupt what is a very fragile supply chain. So I think that this shift to just in case is going to make a lot of sense. Companies went further and further to the edge on just in time, and they're just going to pull back a little bit from the edge to just in case. That represents an opportunity in the long term. You can invest in good cash flowing properties and have a expectation of a rental increase upon renewal. So let's just take a look at some of this article here. Stockpiling critical parts, chips. I think that's what everybody talks about. That doesn't take up a lot of real estate, but it is symbolic of the trend. I think that there's a line in here about foam for seats. Seat foam, that tends to be a pretty big volume. So you're going to need low cost additional storage. Floor mats, tires, those are big storage items. And short of raw materials, that's another opportunity. Maybe industrial outdoor storage would be good, either by the shipping hubs or located near the actual factories. And again, this is just some of the large macroeconomic forces at play that can really make the difference if you're invested in a specific asset type. You have to have a tenant. It's cash flowing now. These are not speculative builds, but it could represent a good opportunity to make an investment into industrial. So that's it. Thanks for joining this short recap of the outlook for industrial. And these are things that make sense to me. If you have a disagreeing opinion, drop a comment below. But otherwise, we'll see you next time.